Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 22nd, 2022. And if this isn't a bottom, I don't know what is, okay? And I say that in all humility. Please understand that technical analysis, trading, all that stuff is not 100%. Anybody who's telling you is 100% is a liar or the best trader that's ever existed. I've been here, making my analysis public for years in the hopes of just sharing, right? And that sharing helps me, as I've said before on the channel. Maybe it helps somebody out there. Doesn't necessarily mean it's always going to be 100% right, but I'm going to try to the best of my ability to make it as accurate as possible for myself, right? And others, right? Because I am operating off of this analysis. I am personally invested in this analysis being correct or as accurate as possible, okay? So that's the premise here. I say this in all humility. And why do I speak in, with humility? It's not because, I don't want to sound cocky or something like that. It's just the market is the market, and the market has humbled me enough for me to know that there's a lot that I don't know. Okay? Just, I don't know if we go into correction, we're going to print a zigzag or a flat correction. Okay? If we print a flat correction, I don't know if that retracement is going to be to the 786 or the 1618. I have no idea. Right? I don't know if something happens fundamentally that breaks a chart, like what we saw on Near Protocol yesterday, right? Where, the technical analysis is broken essentially, and it made a lower low unexpectedly, breaking a chart pattern because of a serious fundamental move, right? The underlying tokenomics of the asset, for some reason or another, were changed. Okay, does that mean it's not going to recover? No. It's just the way it retraced, the way it accumulated, and its AB base looks different than pretty much anything else. So I say this in all humility. I do believe that the bottom is in. Okay, this looks very much like a bottom to me. Okay, obviously we haven't bounced a ton, but we're going to look at so many things that are pointing to the bottom. Okay, and once again, this is a probability game, a game of probabilities. Given all of the data I'm going to present today, it's why I'm trading for this to be the bottom. I'm longing from here. Obviously, I've been long in this entire wait, where is it? 157 day range of that Bitcoin's been in. I've been long, okay? And this range is even longer in some altcoins, because a lot of altcoins started on May 12th, right here, right? They had their orthodox low in right there. So I've been thinking long, thinking accumulation this entire time. I do not perceive a lower low, okay? When I talk about lower low, I don't necessarily mean a lower low in the, a dollar lower than this. No, this is the orthodox low. I'm talking about structurally. I do not foresee a lower low. Like, for us to break this structure, this range to the downside, and create another trading range after an impulse to the downside, I do not foresee that. Okay, so we're just gonna look at why that is, and we do our best. That's the whole name of the game. You gotta do your best, and this is me doing my best. Okay, so with that out of the way, let's look at Bitcoin. All right, let's start on the daily time frame. Here's what I like about this. Okay, I love the fact that this has gone up and then down. Okay, say what you want. Call it a Wyckoff accumulation, call it 2 degrees of AB basing. All you want to see in generally, and we can go through the market, you'll see the same pattern. And that same pattern is going up and going down. And then once you're down there, you pretty much do the same thing once over again on a smaller time frame. Okay, because every single time price changes direction, it has to put in what we call AB bases. And this is what the AB bases effectively looks like. An A wave and a B wave. An initial breakup structure and a counter trend. Okay, that's why you get up and down. That's where the the double bottom comes in. Okay, sometimes it looks like a triple bottom, but most times it looks like a double bottom. Okay, so we're just cycling through. You see the same thing effectively, right? This is a bottom to me. Okay, just cycling through. Ethereum, what do you see? Up, down, and then the same thing on a smaller time frame. Do you see what I mean? So this structurally, and it's not always going to look exactly the same. Here, this one is a bit slanted, showing a little bit of weakness, right? But essentially, it's the same thing. You get an initial breakup structure targeting wave 4 of the previous trend and a counter wave, and then you get something similar on a smaller time frame. Okay? You can see that throughout the market. Okay? So let's go back to Bitcoin. Now, what we want to do is focus in on this little bit, okay? So that's the daily time frame. Obviously, I've already talked about if you go on the weekly time frame, on the monthly time frame, what it looks like and why I think that this downtrend, this drawdown is complete, right? Lots of reasons for that, but we're not talking about that right now. I'm not going to rehash my entire trading thesis here. We're just going to focus on this and this, all right? So let's go into the 4-hourly time frame to really hone in on this range, okay? So this range, as I just stated, is a microcosm of what you see on the higher time frame. Why is that? We know technically it's because it has to be. And right, I said typically it's a two-pronged affair. It's a double bottom type situation, but sometimes you get three. Okay, here you get three, a triple bottom. Okay, but essentially it's the same thing. Okay, because even if you see a triple bottom, if you pay attention, it's just another A wave, initial breakup structure, targeting wave 4 of the previous trend, and then a subsequent B wave. But that B wave, instead of being just one leg, right? It's a composed affair here. Okay, so you get a B wave that looks like this. Okay, that's where you get your triple bottom. And right, why are we humble in our analysis? Even though you may have the best analysis in the world and you may know all of the rules and all that stuff and you've seen it before and you have tons of experience, 10,000 plus hours, you're humble because you don't know what your B wave is going to look like. Your B wave can look like this. Your B wave can look like this. Your B wave can look like this. Your B wave can look all kinds of ways. Okay? Or here, this is a B wave. This triangle that broke down was a B wave. And we kind of saw that, but I thought that was the B wave, meaning this was first degree A wave, this was second degree A wave, and this was the B wave, and so we would go up from here. But now we know the more likely read is that this was a B wave of this. So it goes A, B, C. Okay, so this was B of B. This was the B wave. This triangle right here, or rising wedge, whatever you want to call it, was the B wave of the B wave. It's not so easy to always see those things as they're printing. This is why we're humble. Not because it's going to make somebody happy or get us more followers, or you have to be because your parents told you. You're humble as a trader, as a chartist, because the market is capricious. The market has so many unknowns. And being a good trader, you know what you don't know. And so as a result, you're humble. Okay? I thankfully did not get shaken out. Thankfully, it's a combination of skill. and it's a combination of luck. So I remain humble. So yeah, on this smaller time frame, I see the same thing. I see an A wave and I see a B wave. And when I see this, that gives me confidence that this consolidation is done. Okay? Yesterday we said, it was likely. We're looking for it yesterday, right? Around here. But we didn't get it. We waited a little longer. 24 hours later, we got our move. Okay? This is likely, the beginning of impulsive price action in the market. This is likely the beginning of impulsive price action in the market. This is likely not just a change in trend on a small time frame, but this is likely, this little bit of move that you see here is very likely. Let's go on the weekly time frame, because I don't know if people understand the magnitude of this. It's very likely this trend resuming in this little bit of price action right here. Okay? Great things on the indicator front. Okay? Great things. 3 main time frames are all bullish. Okay? We may even have 4. Let's see. No, 3. Okay? Oh, whoops. What do I want to do? Let's go back to the weekly. Okay. So, on the weekly time frame, you've come all the way back down on the stochastic RSI indicator, or momentum indicator. You've come all the way back down into oversold territory. That is really, really bullish. Okay? After this capitulative move, you come all the way back down here. So this is essentially setting you up for a move back up on the weekly time frame. Okay? On the monthly time frame, we've been absolutely bottomed out and triple bottomed and all that stuff. You can see confirmed bullish divergence on the monthly time frame. Okay? Forget daily and weekly. Confirmed bullish divergence on the monthly time frame. When this goes, it's going to go. It's going to absolutely go. It's going to be 3 to 4 months of, neck break, impulsive price action. Okay? And then finally, on the daily time frame, you have Bitcoin still in oversold territory, printing strong bullish divergence right here. Okay? So the daily, the monthly, and the weekly are all oversold and bullishly divergent. At least the daily and the monthly are. Okay? The weekly can become bullishly divergent if this keeps going. Okay? Those are really good signs, just from an indicator standpoint. Okay? What's the other thing I want to talk about? Okay. Again, this analysis is for Bitcoin, and we use Bitcoin as a proxy for the cryptocurrency markets at large, but you can go into other assets and see the same thing. You see Polkadot right here. You can see my 2 degrees of AB basing, right? I'm putting my B wave in. This resulted in a bit of a triple bottom, and then you have a smaller iteration of AB basing, right? In this right here, okay? And that's exactly what you get in the momentum indicator. You can see that we're completely oversold and about to cross bullish for a big move, okay? You can just go down the line and you can prove it to yourselves, right? The momentum indicators are oversold and they're moving up, not just on the daily, but on the weekly and the monthly for most assets. This is very, very bullish, okay? Very, very bullish. And obviously you have some assets like Litecoin that are front running the market. And I've been talking about Litecoin being very bullish for months, okay? And one of the reasons I've said that is just because on the weekly time frame, if you look at Litecoin's entire price history, right? It's been in a leading diagonal, meaning it's been essentially consolidating for the entire time it's been trading. So when it actually goes into this next wave, which should be the first proper kind of drawn out impulsive wave it's ever experienced, it will completely surprise people who haven't read the chart or who don't know how to read charts and who have no idea why, right? They're going to attribute it to it, Michael Saylor saying something or whatever. You know how people do. They'll see something and then they'll say it's because of that, right? Show me the charts, I'll tell you the news. But know that technically speaking, right, if you go on Litecoin's chart, we're not going to look at it right now because it's on another watch list, but the full chart on the weekly time frame, it's in a leading diagonal and it's about to break out. This is why it's my largest holding in this coming bull run. Okay, so that's the intro, right? Just looking at the price action. What we're going to do now, I'm going to look at some comments or questions. Then we're going to look at the DXY. We're going to look at Bitcoin dominance. We're also going to look at open interests, okay? And we're going to look at a slew of other indicators indicating that this is a bottom. And it's very likely a bottom. Everything's screaming bottom, okay? So we're going to look at that in just a moment. Young Dasa says, if it bounced like that, we are most likely going up. What I'm scared of is this monthly close. We still have a couple days left before this month ends. Bitcoin can still move fast above 17.6. Absolutely. Look, people think that we're going to move with the same level of intensity as we've been moving. And that's false, okay? Nothing that we've experienced in the past 160 days has been impulsive, okay? This is consolidative price action. So even these little moves here, that's not impulsive price action. People have it in their minds that Bitcoin will continue to exhibit this behavior. But what they don't understand is once you move into a different mode of price action, you're in a different mode of price action. The rules change, everything changes, right? That's why they call it impulsive price action. Impulsive price action doesn't stop. It doesn't take, 2 seconds. It doesn't take 2 weeks to go 2%. Impulsive price action does what we saw some altcoins do. It'll go 20x in 48 hours, okay? Impulsive price action will get you to $70,000 in Bitcoin in a matter of days. And this is why most of all that you do in trading, especially swing trading, is all the work is in preparation for a move that you don't exactly know when is going to happen. But when it does happen, you may have, worked for 12 months, 15 months to set up, to accumulate your positions, to organize everything, right? And then those play out in a number of weeks. So it's not that because we've waited for this move for years, 600 days or something like that, it's going to take 600 days to play out. No. More likely than not, the actual bull run will last only a few months. You can have bear markets for years, and then bull runs will only last a few months. This is why you have to prepare for it. This is why people, they buy the rumor and sell the news. That is the technical corollary to that statement. A good trader is like a good hunter. They prepare everything. They stake out. They do all of their preparation for a long period of time. And finally, when it comes time to execute, it happens just like that. Very little bit of time. You shoot, you kill, and that's over. And maybe the interchange or the encounter with the prey only lasted a few moments, but to be able to be in that situation, the hunter had to do months and months of preparation. This is the same thing. You know, people are bored, and people who don't do this like seriously are like, well, you know, why don't you just wait until it goes? Because when you wait until it goes, you miss out. Because you can legitimately do a 20x in 48 hours. Okay? And good luck trying to get on exchanges and buy assets when the price is moving that impulsively. If you don't know, if you're new to the market, when the price is moving really impulsively, either up or down, exchanges break, there's no liquidity, you literally cannot get your orders in. Okay? So this is why we spend months and months and months and months talking about planning, scheming for what may take just 90 days to execute. And then it's all over. Okay? So that's I guess a long answer to Young Dasa's statement. If it starts going, 17.6 is not. That's not a. I'll tell you this. Let me reiterate this fact. Okay, and I'll kind of use this to segue into the next segment of the presentation. You're not worried about 17.6. Once things start moving, one, you'll know it. Two, you have to start doing your analysis on only high time frames, because that's the intensity with which the market will move. Okay? Here, I'm looking for my channel. Here we go. Okay? Once things start to move, if I'm trading, you know, some people like to trade, you know, in and out, small time frames on bull runs. Okay? That's fine, but whatever. It's not that advisable. It's best to just buy and hold, in my estimation. 17.6 is irrelevant. All those small time frame resistances are irrelevant. You want to go a high time frame before you see a relevant resistance. And that next resistance is at 45 to 50K. So I would not be surprised if you got a move 45 to 50K. And that happened in 24 to 48 hours of whenever we really started moving. Okay? And that would represent a simple 2x, right? Not even a 2x, you know, 1.8x, which is nothing. Okay? Understand the targets, right? And I get it. People, we've been in a bear market for so long, it's hard to wrap your mind around Bitcoin even possibly doing this kind of thing, because it's been, you know, completely the opposite. You're just so conditioned to seeing Bitcoin, you know, just kind of doing this for 6-7 months, right? Going sideways. This is literally sideways. Everything that happened is nothing compared to what has happened, right? You go down by 5% and everybody's like, oh my God, that was such a big dump. In the scheme of things, because you're used to very little volatility, 5% is a lot, but if you zoom out, it's nothing. Okay? And so when you're looking at your larger prognostication, yeah, and you look at what Bitcoin is likely to do, when you're charting on the high time frames and you're thinking Bitcoin may do 130x, like a 2x move in a day is not that crazy. Okay? If Bitcoin does 130x in a bull market, and for those of you who are thinking 130x for Bitcoin, how could that happen? Go to the charts. Forget what you think. Just go to the charts. Use the technicals. That's why you have them, right? What's Bitcoin done last time? Or we don't even have to go far, okay? If we're in minor wave 2, about to go into minor wave 3, look at what Bitcoin did in minor wave 1, okay? From the COVID low up until the high, Bitcoin did, let's see. a 14x, okay? So that was a 14x. Now, that was wave 1. And remember, this is not an arithmetic chart. This is a logarithmic chart. So even though this 3-wave seems, just a little slightly longer than this 1 wave, it's much longer because it's a logarithmic chart, okay? So that was a 14x. This would be 130x, okay, for wave 3. We've done it before, okay? Come back to the low, the bear market low of 2015, okay? Look at what Bitcoin did. From the bear market low of 2015 to the top of that bull market, Bitcoin did 118x, okay? Like, just, again, guys, focus on the technicals because the technicals actually give you a good edge. Right? A lot of people won't be able to wrap their mind. They can't. Not won't be able. They can't wrap their mind around Bitcoin being a million plus. They think it's unlikely, and they're basing that off of recency bias of the recent price action. But it's uninformed opinion because the recent price action is just a very, very small sliver of what Bitcoin's done throughout its history. This is why you want to focus on the charts. If you can read the charts, focus on the charts, make your plans based off of that in order to give yourself a good edge. So yeah, that's my take on 17.6. Like, I'm not even thinking about little bit itty bitty resistances. Like, those are going to get smoked. Just run through completely when this actually does go. And yes, it will actually go eventually, right? Nothing lasts forever. When it goes into bullish mode, it will go into bullish mode. It'll start literally pumping. And it's, people say 2-3% pump. That's not a pump. A pump is literally when the price is so volatile, the candles are pumping on the screen because they're going up and down so quickly and then going up, 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 up. Okay? So yeah, that was that. And I didn't mention this, but we held that 5-year trend. All right, let's just go back to that. I'm sorry, I got a bit distracted, but I wanted to mention here, really important, this this trend. From 2017 until today, we held this support, okay? And this is a 5-year trend right here. Yeah? It's about 2,000 days. So that was held. So that's another reason it's likely, very, very likely that it's bottomed, okay? Okay. Now let's look at some other aspects of what would constitute a bottom. We all know that the DXY, the US dollar currency index, is an inverse indicator to Bitcoin and cryptocurrency. And what we see here is, just like we charted, this is likely a wave 1, this is likely a wave 2, and we pivoted up here, and what do you see? We're headed down, okay? And if this continues, this is going to continue down into this wave 3, okay? And this wave 3 typically is the largest, the most impulsive of the Elliott waves, okay? And it usually is about 1.618 times wave 1. So this is very, very, and again, this is a logarithmic chart. So this is a big deal, right? You're down 4% here, 4.5%, and taking this move, it's a little more than 8%. Is it? No, not really. It's an 8% move, so almost twice as much. Okay, almost twice as much. So yeah, we do expect that. As the DXY goes down, then Bitcoin, crypto, risk on assets go up, and that's what we're seeing. So the DXY is well positioned. The other thing I want to mention is look at what Bitcoin dominance is doing. Okay, we put in this move to the downside yesterday. I believe it was yesterday, and we had another retest of this level. So this is basically telling me this is a corrective wave. This is a corrective wave. You're eventually going down in the direction of that initial corrective wave, right? Because if this is a corrective sequence, it's going to come in a 3-wave package, okay? So that's going to be wave 1, wave 2, wave 3, your impulsive wave, okay? And why is it important to look at Bitcoin dominance? If Bitcoin dominance goes down, that means we're in a bull market because altcoins are gaining against Bitcoin. So this is exactly what this chart is showing us is being prepared, okay? Basically a continuation of this larger trend. So Bitcoin dominance looking good to usher in the bull run, okay? And finally, just looking at indicators, here we're looking at Bitcoin shorts, okay? Open interest, okay? I'm going to go on the weekly time frame here just to present this. Now, this is open interest specifically on Bitfinex, okay? Why do we look at open interest? Open interest is basically what runs a lot of the market, right? It's what creates a lot of the liquidity in cryptocurrency. Okay, a lot of the money is paper money. It's representative. So, I can put a few $100s down and then I can leverage it 10 times, 20 times, 30 times, 40 times against the value of the initial investment to create a number of shares disproportionately larger than what I invested in, the fiat value of what I invested in, right? A lot of the market is like this. And what we've seen with Luna, with Celsius, with FTX, with all these big companies, they're also using leverage. They have liquidation points, right? Michael Saylor has a liquidation point. That means they're borrowing against their investment to make their investment bigger. This is a function of greed, okay? The whole market is just fear and greed. So these are deleveraging events when the market's flushing out the leverage, excessive leverage, and a lot of these companies that are over leveraged and don't practice good risk management get liquidated. Okay, Celsius, FTX, Luna, on and on. Okay, and now the last one is the digital currency group. I forget what's the name of the exchange. Anyway, it's not an exchange, but it's like they fund. Is it called Gemini? No, it's not Gemini. Anyway, it's a fund that basically is backed by the digital currency group, and they're insolvent. And one of the reasons these players become insolvent is not because they don't feel like holding their coins anymore. It's because their coins have liquidation points, okay? This is why we look at open interest, okay? Another thing is, in the analysis of open interest, what you want to see is if you want to go up, typically you go up when shorts have accumulated and there are fewer longs. You go short when longs have accumulated and there are fewer shorts. Okay, it's kind of inverse psychology. When most people think the market's going to go up and they're betting on the market going up, then it's going to go down. When most people think the market's going to go down and they're betting on the market going down, it's going to go up. What do you see here? You see here that since August or July of 2021, we have not had a higher level or amount of shorts on the market. Okay, and this is Bitfinex. So Bitfinex is not like your amateur, grandma's exchange for trading. Bitfinex is where the big players trade. It's where the industries trade. It's where the whales the 6, 7, 8-figure player, 9-figure players trade. Okay, so on Bitfinex, they're betting. Most people are betting, more than ever before. For the past two, more than two, for the most. There are more bets against Bitcoin or on Bitcoin going down for more than in more than 2 years. There are more bets on Bitcoin going down than ever before in the past 2 years. This is what this shows us, okay? On the high time frame, okay? Smaller time frame, zooming in. I want to show you something. Let's go even smaller time frame. Let's go on 4 hourly time frame. Okay? What do you see? You see a clear impulse, okay? Looks like a 5-wave move to me, okay? This looks like an initial break of structure. This looks like a counter to that initial break of structure. So this is an A wave, this is a B wave. This looks like some consolidation. And it looks to me like you're going to get a move against the shorts, because the shorts have reached resistance. They've exhausted themselves. You've gone 5 waves up, and now you're preparing to go 3 waves down, or reverse, okay? And why am I saying reverse instead of going 3 waves down? Is because look at the base. The base is corrective. A, B, C. It's corrective. It's not a proper impulse where you go 3 waves down and then you continue on your merry way. Big difference, okay? So because the base is corrective, right? You go in 3 waves up. Now this entire wave function of short open interest, short selling open interest that have been forming since September of 2022. Okay, so last month, 2 months ago, is finally correcting into a squeeze of shorts. Basically, shorts are going to get squeezed because the chart itself shows that they've peaked and they're at a resistance. You've put in 3 waves, and now you've put in your beginnings of some AB basing for reversal. So when I look at the open interest chart, this is what I see as an Elliottian. I'm also reading waves, okay? Now, this is all the technicals. This is all the sort of the information that we can glean from price action as to why the bottom is in. Additionally, I would like to briefly discuss things that I don't typically discuss on the channel. The narratives, the macro, the backdrop, okay? What is that? So basically, when you're hearing people talk about crypto these days, there's a lot of negative things, right? There's a lot of bad, negative news stories. There's a lot of minor capitulation. Like I saw, and we're going to go through Twitter, right? Where a lot of these things, I see a lot of these things, right? And obviously, take everything with a grain of salt. But now I'm looking at Twitter, and I'm going to go through my some different tweets just showing us what a bottom looks like. Sorry, 1 second. Let me try and find my likes. Okay, where do I go to see this? I set this up before, but for some reason it's not. Sorry, bear with me 1 second, guys. Twitter's acting up. Surprise, surprise. Okay, here we go. Likes. Okay. So let's just go down. Okay, Here is, okay, so let's start with this. So Rand Neuner from Crypto Banter is basically showing what I showed you in the Bitfinex, but you can see this throughout the market and throughout a number of exchanges. People are short. Many more people are short than are long. So this particular exchange that he's referencing, they're showing that about 3 times as many people, a little more than 3 times as many people, are short Bitcoin than they are long. Okay, that is the best setup for a short squeeze. Now, the market's not always wrong. Market participants aren't always wrong, but they tend to be. Okay, the crowd tends to be wrong. Okay, so that's like what we're just looking at. You know, the idea of a short squeeze. Okay, this tweet shows the halving cycle, which is interesting. It's essentially showing you that there's a period of time between within which Bitcoin typically changes from bearish to bullish, and that comes approximately between 780 and 1,020 days after halving. And so we're essentially in this zone halfway, actually right beyond the middle of this zone. So we're past 900 days since the last halving. And so this is when you would expect historically Bitcoin to switch from bearish to bullish, and it has in the past. Okay, so it's just basically showing you 1, 2, 3 different 4-year cycles, and this is the 4th. Okay, so that's the idea. Yeah, 2019, 2012, 2012, 2016, 2016, 2020, and 2020, 2024. So this would be the 4th 4-year cycle that we're in, and you would expect Bitcoin, based off this data, to go from bearish to bullish. And so that this is an additional kind of piece of data to really indicate that the bottom is in. Okay, now this is another interesting thing. All right, let's open this up. So you guys may know I've referenced this on the channel before. This is the CBBI index, right, by this guy named Colin, and it's an index, meaning it's an aggregate of a lot of different indicators, on-chain data, and different metrics that show where Bitcoin is with reference to a top or a bottom. Okay, and so this is showing you that all of these indicators, 1, 2, 3, 4, 5, 6, 7, 8, 9, are essentially saying the bottom is in. Okay, I'll let you do your own research on your own time, but the pi cycle top indicator, the Rupal, the Nupal, the R hodl wave, fuel multiple, 2-year moving average, Bitcoin Trello, all that stuff, they're all showing a bottom. This is significant, right? Historically, this has been quite accurate, because when this CBBI index is between 0 and 10, I believe. So where is it? Yeah, this is okay. So this blue line right here is the CBBI score. Okay, and you can see when it's low, Bitcoin is bottomed. When it's low, Bitcoin's bottomed. It's low, Bitcoin's bottomed. It's low, Bitcoin's bottomed. It's one of the lowest it's ever been, ever. And this is likely indicative of a bottom. Okay. Remember, the score, the CBBI score, is an aggregate of all of those metrics that I've listed. Okay, and I showed you this, this 5-year trend line that this mustache El Crypto Prof is showing. 1, 2, 3, 4 touches. It's unlikely that this breaks all of a sudden. It's a 5-year trend line. Also, if you're a somebody who likes to use moving averages, we're below the 300-week moving average for the first time ever. Okay, whatever you make of that. I'm not big into moving averages, but I guess that's significant. Okay. Again, Selkis points out the market value to realized value has fallen below 0.6 only twice in the past decade. So there's so many indications. And there's one more I want to show you. Let me see if I can find it. But this one is it's anecdotal, but I think it's very, it's really interesting. It's basically miners giving up, throwing their hands up and just giving up. They left. So there were miners somewhere, I don't know where in the world, but they just ended up leaving all their stuff and, just giving up on the price because, it just cost way too much to run a Bitcoin rig, right? A rig of mines. And after a while, you just can't afford to anymore. And so they quit. But unfortunately, these people have quit at what is likely the bottom of the market. Let's see if I can find it. I don't know if I can find it. Yeah, I can't seem to find it. In any case, it's just it was a picture of a company that just abandoned its miners. Okay, it's Bitcoin miners, and just like, fuck it, we're not doing this anymore because it just costs too much. The price is too low for them to justify continuing to operate the miners, paying the electricity, all that stuff. So they literally just left their machines. I don't know if that's true. Sometimes people just do things for a tweet. But the sentiment is generally very low. Okay, people do think, a lot of people are saying on social media, if you're on Twitter or whatever, other analysts, prominent analysts are saying it's likely that we revisit 10 to 12K or even lower. I don't think that's likely given what we're seeing here on the charts, okay? Now, let's look at some of the early movers. We all know if this is truly a bull run, then Bitcoin is going to be one of the last to move. It's not going to be at the forefront of everything. We use Bitcoin as a proxy for the cryptocurrency markets at large, but we understand in a bull market, Bitcoin is a lagging indicator. Okay. That being said, what altcoins are showing strength and showing to be relatively more bullish? Okay, just on the day, we can see that Dodo is showing some relative strength against Bitcoin. Dogecoin is showing some relative strength against Bitcoin. Litecoin is definitely showing some relative strength against Bitcoin, and it's in this huge inverse head and shoulders pattern that when it does, let's just put it like this. When it does break out, will break out because it's at resistance. It's at a major resistance. So when it does break out, it's going to give us a huge breakout. Okay, up 12% for the day. Synthetics, it's up relatively more than Bitcoin for the day. BNB, up relatively more than Bitcoin for the day. Okay, all of these are showing relative strength against Bitcoin. And we can go in our general watch list, and we can see there are many more. Okay, Litecoin is the leader here. EOS, I guess. Axie Infinity showing relative strength against Bitcoin, up 10%. Link up 8% already. Dash up 7%. Do you see? Matic, 1 inch, right? And the list goes on. They're not blowing Bitcoin out of the water, but you can already see a trend that there are lots of altcoins that are outperforming Bitcoin, which you should expect. Okay. And then the other part of this that we want to see is obviously our are crypto bubbles, okay? This will help us really see generally in the market what's going on in terms of performance, right? Even more wider in scope than our watch list. So if you just look at the daily performance, you see Litecoin went up almost 20%. Okay, that's probably the biggest mover in the top 100 to this point. In the top 200, let's just make sure we're... Okay, let's look at the day, not the week, sorry. Okay, so Curve Finance, up 26%, Link, right, Axie, we already said that, Litecoin, yeah, okay. So that's top 100. Top 200, KAS, Telcoin, CELO, up double digits, okay? Secret, up 12%. CVX, up almost 10%. You know, and this is all while Bitcoin's up just 2%, right? Time, up almost 30%. Liquidity, up almost 14%. PolyX, up 15%. Volt, up 13%. Pirate Coin, 8%, right? Now we're getting into some big movers. Ramp, up 67%. VIDT, up 100%, right? This is the type of performance you can expect against Bitcoin in a bull market. This is why people got into altcoins in the first place, because it represented an asymmetric gain on investment in a bull market. This is exactly what you see here, right? Bitcoin's up 2%. Meanwhile, something called VIDT is up 100%. It's literally up 50 times what Bitcoin's doing. Okay? Doesn't mean you should do that. It's just, this is what you see in a bull market. This is why Bitcoin dominance falls. Okay? Top 500. LF up 40%. Lever 55%. Right? You can see it for yourselves. You have some big movers here. And all the while, Bitcoin's only up 2%. Okay? Right? Can we find Bitcoin here? Where's Bitcoin? I don't see Bitcoin. Does anybody see it? It's like, where's Waldo? I don't see it. Is it that small? In any case, the point's been made. So yeah, that's why I really strongly believe that this is a bottom. Okay, that's the analysis. DXY is looking very good. It's looking like we are going to get that move down for wave 3. And yeah, the charts, generally speaking, are doing what we expected, right? We didn't know how. This is the, why we're humble. We didn't know how we're gonna get our 2 degrees of AB basing and a pivot, or just 2 degrees of AB basing. But we eventually got 2 degrees of AB basing, right? And a move. So boom. So that's it for me, guys. Unless there are any questions, any particular requests, I'm gonna call it a stream. Keep it short and sweet. I really hope that you guys are still around, because it's been hard. It's been very challenging. One of the hardest things I've ever done. Just trading these bear markets, accumulating these positions, and nothing lasts forever. The bear market doesn't last forever. The sideways market doesn't last forever. And we will eventually reap the rewards of our efforts. And so, yeah, you just have to stick it out long enough for things to turn around. Don't give up. Don't give up. We're pretty much there. All right? Guys, thank you, and I will see you tomorrow. Take care.